back to Golden Rule Radio. We will look ahead to the coming week, but we also need to look behind. A lot of volatility, a lot of action, not only in the metals markets, but in the markets that impact the metals, not the least of which are the equities markets and the Christmas crash, I'm going to call it. So before we jump into gold, silver, platinum, and palladium, Miles, you want to throw up your fascinating chart that you've got here today?
Sure. Up almost 1,100 points on the day. I guess equities are the thing everybody's talking about. I'd like to actually go back to a Zero Hedge article from last Friday, which I'm sure a number of our listeners have probably read, but it was a report coming out of Wells Fargo talking about a rebalancing of corporate pension funds, moving funds out of the bond market and over into the equities to try to even stuff out here in the last few days of the year. So with 3 trading days left, 4 if you count today, Wednesday, we did see a little bit of a rebound on the Dow. Now, what I always love, once again, is when the fundamentals or the story lines up with the technicals. So we can actually go back to a gap, a rising gap that was formed back in September of 2017. Lo and behold, where'd the price come into?
Right into the gap.
So it's no surprise of mine. Now, what took it down to that gap obviously could have been some manipulative markets, knowing that there were a ton of standing orders that would have already been sitting there waiting to get filled. So in all fairness, we will say congratulations to the Dow on, I believe, the largest single-day rise since March of 2009. At one point this morning, we were down about 12.5% on the year, but we are now only down 8% on the year. And if you just look at the last few months here, we were down almost 20% since October, now down only 15%. So do we see the Dow making an 8% rise over the next 3 trading days? I'd certainly say absolutely not, but it is good to see them trying to tinker with some stuff.
Well, and I think, too, this is a focus on the precious metals, but with the equities markets oftentimes dictating things, right? Gold is a reactor. We often say that on the show. And so gold is going to be sort of that barometer or a reaction to what's going on in the dollar or in equities markets or geopolitics. And you're seeing a lot of strain in all those areas. But you saw the metals price reverse. We had hit a cycle high here, which you're going to get into as well. But with the equities having such a big bounce, I think in the coming days we're going to hear that there is a one oversold position, right? They're going to say stocks just were oversold going into Christmas Eve. And 2, there's this mention of the assembling of the Plunge protection team, right? And very, very rarely have you ever heard it discussed publicly, and certainly that term used. But Reagan initiated the Plunge protection team back in the late 80s, and it really is his team. And Mnuchin came out and said, hey, I assembled the CEOs of the top 6 banks, the too big to fail banks.
Sure. Everybody gets a power ring.
That's right.
And from time to time, they hold them in a circle.
They get to sit at the Knights of the Round Table.
And summon the Plunge protection team.
How are we going to spend the money? We'll make the money easy. How are you guys going to go invest it and juice the market? So that is the reality. That's what the Plunge protection team does. So we can look at all the technical analysis, which is brilliant. I love it. We can listen to the speakeasies say that, yes, it's an oversold market, but really this reeks of manipulation. This isn't the capitalism that the country was founded on. Keep in mind, this is not a free market. So when we're breaking down and analyzing the precious metals and the equities, the days are long gone where the actual free market economy rules the roost.
Sure. So our market recap today is technicals, Plunge protection team manipulation, which I would agree with you is the biggest argument out there because they've, through the Treasury, got the biggest stick to shake. Following on those heels, the corporate pensions. And finally, I'll throw another one out there, the energy sector, because if you look at the biggest winners today.
Wow.
Yeah, all energy.
Yeah, I mean, you brought this here today. I mean, you've got, the top performers of the day. Yes, you have a huge Dow day, but from the New York Stock Exchange, biggest percentage gainers. I mean, the top 25, literally 21 of the 25 are energy companies, right? Up between 12 and 24% in one day. That is enormous. But that also coincides with crude oil being up 9.9% today. So even better than what we've seen the Dow do. And so you're wondering what's going on there from an energy standpoint. I personally am glad to see it. Lends a little credence to the commodities markets. Silver has followed suit. Gold has turned back down. And so we're seeing sort of a broad-based commodity rally.
So as you mentioned, gold, let's get back to the point of this podcast, looking at the precious metals market. Gold is about halfway between that 50% and the 618 fib. I believe this correction back down from, I believe, just under 1280. We're now sitting above that 50% line, 1265-ish. I just think that's the next step up. I think we are pushing up to 1285, 1290, and then we're going to see an actual correction back down from that point. If we don't see that type of correction back down, things are looking very bullish for gold. So 1285, somewhere between 1285, 1300, I think that's our interim stopping point. Then we probably have a real pullback somewhere between 1240 and 1260. And then we start shooting back up for the above 1300 numbers again.
I think what else lends credence to that statement, Miles, is this is all coinciding with the dollar rally today. Normally you would see these markets move in relation to the dollar decline. But that's not the case. The dollar actually rallied today with the equities markets. And so gold should turn back down, and yet silver is rallying despite it. And it's narrowed that ratio down from about 87 last week down to 84 to 1 today.
Sure, and silver did something today that gold already had done, and that's the breakout out of the trading range. Silver's been locked between 13 and 15 since August. We finally moved above the 1, 2, 3 times we've tried to push above that price. So we'll see if silver can hold above, expect it to come back down slightly. And if it manages to hold above the top end of that trading line, then we're going to get to draw some new lines on this chart and should have an interesting first quarter 2019 in the white metal.
It would be nice to see that stair-step effect that you've been describing for the last number of weeks in gold. And have that start occurring in silver as well. How about platinum?
Platinum's similar to silver in that it's in the range. However, I would argue still in that range. We did have an update in platinum the last couple days. It's kind of holding steady while the others have turned around on the Dow rise. So platinum still has some ground to go. Actually, it has quite a bit to go. I'd say you can't really argue much of anything on the upside on platinum till we see numbers really about 830, which is your 50% line coming down to that November low. But honestly, I'd love to get up to that 618 fib, which is around 845.
And finally, anything to notice on palladium?
Just continued compression. You know, we came down to the low end of that compression line. It's still pushing up. Should turn up again here, push up another 10, 20 bucks, and then we'll see what it does once it gets to the top end of that line.
Well, you know, we're sitting in the middle here, Miles, of a temporary government shutdown, federal government-wise, and to what extent is it going to continue? We don't know. For how long? We don't know. But what we do know is that coming out of the backside of this, there's going to be a budget negotiation and deal reached, right? And with that's going to come increased debt. And what people don't realize is since the last economic crisis, global central banks have added $100 trillion to global debt, okay? $100 trillion, think about that. So if you're wondering if the equities markets are capable of telling you that all things are good and that the markets are going to protect us all from an economic decline, think twice about that, because you cannot service the debt. Granted, the U.S. dollar is the one climbing. Our own central bank, the Federal Reserve, is the one raising interest rates. But when that starts happening in Europe and Japan, you're going to start to see the same sort of pressures. There will be a global economic downturn. To what extent, it's hard to tell. One thing we did not note at the beginning of the program when we were focused on the Dow is that it literally was just points away from a technical bear market. So if there's justification in the psychology manipulation of the American investor, it's that. It's that let's not let the headlines in the papers be that we're in a bear market. But Miles, don't you kind of get the sense that that's coming?
Yes, Troy, I absolutely believe that we're looking at a potential, by any measure possible, bear market in the equities. Granted, we've been looking at why we feel we're turning bearish for a number of months now, maybe even a number of years now. But by any measure possible, you get below certain technical levels, and there's nobody out there that can argue the opposite. So the next 3 trading days of this year, I believe, will be key. And certainly first quarter of next year, I believe, will be key. We have to get back up to at least a middle road between where the trading was throughout the year,
another
2018,
10% climb from here,
at least, to argue that we have any hope at resuming the bull market that the equities market had been in for the previous 5 years.
And I want to remind everybody too, it's okay for us to see these pullbacks. It's been long overdue. It's healthy. It's better for the market. And likewise, your precious metals portfolio hedges you, right? So The last 8 weeks, gold has done exactly what it's supposed to do for your portfolio. That being said, too, we're coming up on a seasonal trend where we tend to have a very strong first quarter. So keep listening, keep watching, keep your eyes and ears open on your own research and analysis, and shoot off some listener questions to you we'd be happy to address.
So that's going to do it for us this week, Christmas week on Golden Rule Radio. We hope you and yours had a wonderful holiday and a good New Year's coming up. As Tori mentioned, if you have any questions, throw them in the comments. If you like what you heard, hit the subscribe button, ring the bell, head on over to our website, McAlvany.com, Twitter, @ICA Gold, and Facebook, McAlvany Financial. As always, you can call us at 1-800-525-9556.
Thanks for listening. Have a great week.